Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Construction Bank Corporation Annual Report. China Construction Bank Corporation offers a wide range of banking and financial services to individuals and corporate customers globally. The company operates through various segments, including corporate finance business, personal finance business, treasury and asset management business, and others. The bank provides loans, trade financing, deposit taking, wealth management, agency, and advisory services to its clients. It also offers cash management, remittance and settlement, guarantee, and investment banking services. Additionally, the company engages in interbank transactions, repurchase agreements, debt securities investments, derivatives trading, foreign currency trading, precious metal trading, and custody services. In terms of insurance, China Construction Bank Corporation provides various types of insurance policies, including motor vehicle, business and household property, construction and engineering, liability, hull and cargo, short-term health and accidental injury insurance, as well as reinsurance. The company also offers cost consulting, whole process engineering consulting, project management, investment consulting, and bidding agency services. Furthermore, the bank is involved in private equity investments, development funds management, and other private equity fund management. It also provides investment banking-related services, such as sponsoring public offerings, corporate mergers and acquisitions, direct investment, asset management, securities brokerage, and market research. Other services offered by the company include house rental business, fundraising, annuity and pension funds management, and pension advisory services. Overall, China Construction Bank Corporation is a comprehensive financial institution that offers a diverse range of banking and financial services to its clients globally. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for the company can be attributed to a combination of factors. Loan growth in key areas has been a significant contributor, with equity investments also playing a crucial role. The expansion of credit supply and comprehensive credit lines has further boosted revenue. Additionally, the company's asset-backed securitization business has seen a 38% increase in scale, while bond underwriting for non-financial enterprises has experienced an 85.85% surge. The company's wealth management services have also been a major driver of growth, with the launch of new products and investment strategies contributing to increased customer engagement. The expansion of global cash management service scope and payment processing efficiency via SWIFT have further enhanced revenue. Furthermore, the integration with high-quality agency sales partners and development of an open wealth management ecosystem business have led to significant increases in assets managed by family trust advisory business and insurance trust advisory services. On the other hand, there are no primary drivers of revenue decline mentioned in most pages. However, fee and commission expense increased by 2, while operating expenses increased by 96, contributing to a decrease in revenue from certain partnerships. The net income of a company underwent a mixed trend, with both increases and decreases observed. Initially, the net income increased by 1.04% from RMB 336,282 million to RMB 339,790 million. However, it later decreased by $3.466 billion, or minus 4%, from $86.817 billion to $83.351 billion. Despite this fluctuation, the overall trend showed a steady increase in net income. The profit margins of the company also experienced changes. The net profit margin decreased by minus 0.76% from 46% to 45.6%. Additionally, the return on average assets, ROAA, and return on average equity, ROAE, both saw decreases, from 0.85% to 1% and 10.69% to 10.04%, respectively. Furthermore, the net interest margin decreased from 1.51% in 2024 to 1.34% in 2025. The reasons behind these changes can be attributed to various factors. China's economy demonstrated resilience and achieved innovative development, while financial markets operated steadily with confidence in the capital market bolstered. The banking industry witnessed steady growth in size and profits, overall stable asset quality, and rising quality and efficiency in serving the real economy. Additionally, there was an increase in liabilities such as financial assets sold under repurchase agreements and deposits from banks and non-bank financial institutions, as well as a rise in long-term bond investments. The company's financial performance indicates a strong ability to generate cash from its core operations. One key indicator of this is the significant operating cash flow generated in 2025, amounting to RMB 101,242 million. This substantial figure demonstrates that the company is successfully converting its profits into cash, which can be used for various business purposes such as investments, debt repayment, or further expansion. Furthermore, the net increase in cash and cash equivalents for 2025 was also positive at 492,396. This suggests that the company's operating activities are not only generating sufficient cash, but also increasing its overall liquidity. The combination of these two indicators provides strong evidence that the company is indeed generating positive operating cash flow, which is a crucial aspect of any business's financial health and sustainability. The company's debt level has experienced a significant increase over the past year. According to the extracted summaries, the gross debt level rose by 12.3% from RMB 40.57 trillion in 2024 to RMB 45.63 trillion in 2025. Similarly, total liabilities increased by 12.68%, and total debt saw a 12% rise. This substantial increase in debt levels is a notable trend. In contrast, the company's interest expenses have shown a mixed picture. While there are instances where interest expenses decreased, such as a 10.92% drop from RMB 651,675 million to RMB 580,488 million, other cases indicate no significant change or a slight decrease of 7%. The net interest income also saw a decline of 2.9%, indicating that the company's increased debt level has not been offset by corresponding reductions in interest expenses. The performance of the bank's various segments and regions has been mixed. On a positive note, the personal finance business has been a significant contributor to the group's profit before tax, accounting for 40.62% of it. The treasury and asset management business also performed well, making up 33.58% of the group's profit before tax. Additionally, the corporate finance business, although not as strong as the first two, still accounted for a substantial 22.19% of the group's profit before tax. The bank's investment arms have also shown impressive results, with CCB Investment and CCB Financial Leasing generating net profits of RMB 3,791 million and RMB 3,085 million respectively. The Yangtze River Delta and Bohai Rim regions have also seen growth, with 14.38% and 15.69% increases in employees respectively. However, there are some segments that have underperformed. The corporate finance business has been weaker than the personal finance and treasury businesses. CCB P&C Insurance has struggled to turn a profit, generating only RMB 28 million in net income. Furthermore, the northeastern region has seen a decline in both the number of entities and employees. The treasury business has also faced challenges, with a net interest expense/income of minus 88,821. Overall, while some segments have performed well, others require improvement to drive growth and profitability for the bank as a whole. The company's outlook and strategy are centered around several key areas. Management is prioritizing national strategies to serve the real economy, which involves strengthening strategic research and forward-looking planning. This includes developing the 5 priorities in finance, a comprehensive framework that guides decision-making. In addition to this, the company is actively managing its risks, including interest rate risk and exchange rate risk through a robust market risk management system. The group has also established a comprehensive consumer protection framework with clear responsibilities and specialized committees to ensure consumer safety. Furthermore, innovation and green transformation are key areas of focus for the company, as it aims to build a low-carbon economy while maintaining profitability. This is reflected in its commitment to integrity and consumer protection, which are essential components of its overall strategy. Overall, the company's outlook and strategy appear to be focused on balancing economic growth with risk management and social responsibility, positioning itself for long-term success in an increasingly complex business environment. The company has a long-standing tradition of paying dividends to its shareholders. With cumulative dividends exceeding RMB 0.3 trillion since listing, it is clear that dividend payments have been a significant aspect of the company's financial strategy. In 2025, the company paid out cash dividends per 10 shares amounting to RMB 3.887, with a total payout of RMB 108,178 million. The payment of dividends was not limited to ordinary shareholders. Preference shareholders also received their due on December 26, 2025. The company's commitment to dividend payments is evident in its history, and it appears that this practice will continue into the future. That concludes the financial summary for China Construction Bank Corporation. Feel free to comment below, and I will be happy to answer them when possible.